Good evening, everyone. Welcome to the channel. Today I am going to talk about China Jinmao interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Unfortunately, I don't see any extracted summary provided. Please provide the summary so I can generate a quick read overview essay for you. China Jinmao stock price skyrockets. A year of robust growth over the past year, China Jinmao Holdings Group stock has experienced a remarkable surge in value, outperforming both the Hong Kong real estate industry and the broader market. Several key factors have contributed to this significant growth. Strong financial results in HON 2025 saw a 14% increase in revenue and a 48% year-on-year growth in operating profit, with an improved operating margin of 8%. Analyst upgrades from Goldman Sachs and HSBC further boosted investor confidence, citing potential for quicker improvements in margins and return on equity. Robust sales performance, including a 46% year-on-year jump in August 2025, sales to RMB 9.08 billion, also played a significant role. Favorable real estate policy relaxations, such as Shenzhen's relaxed housing purchase restrictions, further supported market demand and prices. Strategic land acquisitions, adding over 1.45 million square meters to China Jinmao's planned gross floor area, have also contributed to the company's growth. These collective positive developments have driven China Jinmao's stock price up by a staggering 149.97% in the past year. The primary drivers of revenue growth and decline for a company can be identified through an analysis of its financial statements. The data reveals that revenue growth is primarily driven by increases in land and property development revenue, retail commercial operations, hotel operations, customer contracts revenue, and Jinmao services. Specifically, the land and property development segment saw a 17% increase in revenue, while retail commercial operations increased by RMB 784,600 and hotel operations surged by 100%. Additionally, customer contracts revenue rose by 14.9%. On the other hand, revenue decline is attributed to decreases in commercial leasing and retail operations, as well as hotel operations. The commercial leasing and retail operations segment saw a 5% decrease in revenue, while hotel operations declined by 12.1%. These findings suggest that the company's revenue growth is largely driven by its property development and services segments, while declines are primarily due to softening demand in its commercial leasing and retail operations. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes across various sectors. Notably, profit margins have fluctuated, indicating shifts in operational efficiency and market conditions. In land and property development, profit margins have improved by 1%, rising to 12%. This increase suggests that the company's ability to manage costs and capitalize on opportunities has enhanced its profitability. Conversely, hotel operations have seen a decline in profit margins, dropping from 43% to 34%. This decrease may be attributed to increased competition, higher operational expenses, or decreased revenue. Similarly, Jinmao Services has experienced a decline in profit margins, falling from 25% to 23%. The reasons behind this decrease are unclear, but could be related to changes in market demand or internal inefficiencies. Commercial leasing and retail operations have maintained their profit margins at 79%, indicating stability in these sectors. However, the lack of information on net income change prevents a comprehensive assessment of the company's overall financial performance. The company's financial performance indicates a positive trend in its operating cash flow. According to page 108, the current period shows an operating cash flow of RMB 8,257,903, which is a clear indication that the company is generating sufficient funds from its operations. This suggests that the company is financially stable and capable of meeting its obligations. The company's debt level and interest expenses have undergone significant changes over the past year. While total debt increased by RMB 27,876,833, interest expenses surprisingly decreased by 8.2%. This discrepancy suggests that the company has managed to negotiate lower interest rates or reduce its borrowing costs despite taking on more debt. The decrease in interest expense is a positive development for the company's financial health, indicating that it may be able to service its debt more efficiently. The company's financial performance varied across different segments and regions. Notably, the land and property development segment saw a significant increase of 17% in revenue, while Jinmao Services also experienced a notable rise of 20%. The commercial land and leasing segment performed well, generating $20,016,838 in revenue. On the other hand, some areas underperformed. Commercial leasing and retail operations suffered a decline of 5% in revenue, while hotel operations saw an even more substantial drop of 12%. These results indicate that certain segments require improvement to boost overall performance. Management's outlook and strategy. The company is shifting its focus towards reclaiming land auction deposits. This strategic move is complemented by the investment in Phase II of the Changsha Meixi Lake Primary Development Project, which indicates a commitment to expanding its operations. Additionally, management has acknowledged potential risks in the property market and will implement hedging strategies as needed to mitigate these risks. Furthermore, the company is prioritizing the growth of its Jinmao Services business, which has already shown positive results with a 3% increase in trade receivables. The company has made several key transactions through acquisitions and divestitures. Notably, it acquired properties worth RMB 83,636.8 million, which includes investment properties, properties under development, and those held for sale. Additionally, it acquired right-of-use assets and trade receivables in smaller amounts. On the other hand, the company has also made some divestitures. One notable example is its decision not to exercise its 15% interest in Jinmao Investment, effectively relinquishing this stake. The company has a history of paying dividends to its shareholders. This is evident from the financial summary, which highlights that the company has distributed significant amounts to investors. Specifically, it is noted on page 26 that RMB 63.7 million was paid out in dividends, and on page 87 that a total of approximately RMB 368,997,000 was distributed to shareholders. That concludes the financial summary for China Jinmao. Feel free to comment below, and I will be happy to answer them when possible.